Hello. In this video, I'm going to demonstrate a very simple passive-aggressive or defensive-aggressive recipe. And then I'm going to demonstrate how easy it is to modify that recipe to be even more defensive with very little changes. Now I have on here a chart of BTC USD. I have the main recipe and then 6 other derivatives that use what I will refer to as the base recipe. TradingView started griping on the last one, so I couldn't really finish it. So it's just a copy of the first one. So let's get started and let's zoom this in. This is the base recipe. Very simple, very elegant, tuned for KuCoin. 1% take profit. Let's take a look at the Dca module. Nothing overly spectacular here. Very simple, very easy to work with. Set to 99 positions, or basically a $1,000 maximum budget if you use a $10 position size. If you're using relay and trade $1 position sizes, then the maximum coin will have $100 budget. Of course, profits are a direct relation of position size, so smaller position sizes are going to rely more on aggregated profits. But that has its advantages as well. Now the moving averages. This is actually a compound moving average with confirmation. I'm using a 37 rule and a momentum. Now I have the momentum inverted, so all it can do and all is allowed is to purchase above the momentum line. Very simple. This is the base algorithm. On a 1-minute chart, 14 trades, 1%. Maximum purchases per cycle is 10 at the moment. But because I've allowed 99, I have plenty with this coin. So, this is a very good, very easy, and very simple recipe. It's not something that is over the top insane. It just does a very good job. But I'm going to go through and I'm going to go up to different time frames. Since we have been in a bearish trend since mid-November, and actually quite possibly going back to mid or early October, let's see how this does on the bigger picture. So let's look at the 3-minute chart. Okay, let's look at the 5-minute chart, roughly 1 month. Here's this big drop we recently had. Here's that big drop again. So it's pretty easy to see that this recipe really does a good job in dealing with any insane markets. as long as you plan your budget. Here it got out on the long term right before the market went down again. So it doesn't matter what time frame you pick. In reality, a good recipe, even in a bearish trend like this, will do well. Gets in, makes its 2%, gets out, all of this drop. Gets in, makes it 2%, and here is another drop. If you look back at the history, you can see time and time again, it does that. And it doesn't stay in the market very long. This is actually probably one of the longest runs, which is a couple of months. But still, not very long and really very good. So it's only going to give me a little bit of a year's worth of data. But still, that's pretty good. Now, of course, these longer time frames require larger budgets. But still, this is good. This is profitable. And as you can see in each case, it avoids all of the massive market turmoil. Now let's go to the second recipe in this combination. And the one thing I want to make clear, your base recipe is always going to be your most aggressive. Anything you add to the base is going to make it more conservative or more defensive. You will never increase the aggressiveness by adding more indicators. Ever. So let's move to the second combination. And here I simply added an RSI. Now you'll notice we went from 14 down to 5 and only one position. So this is literally a one-hit approach, at least on the 1 minute. Let's look at the 3 minute. Okay, let's bring this down. One position here on the 3 minute. Let's recenter this. Okay, this one is 4 positions on the 5 minute. That's still well within acceptable tolerances. This one is only 2 positions. One position. Now the one thing to pay attention to is, in each case, this is still remaining very limited and yet very conservative. This recipe modification is really quite good with higher position sizes, as you significantly have eliminated the risk using it. And again, of course, we see November all the way down to now. and only one opportunity proved useful in this mess. So, RSI certainly made a good modifier to this combination. Let's look at the bigger picture with the RSI on it. There we go. In the 4-hour, it doesn't even want to deal with the market. So roughly only the 2-hour does well. So now let's go to the third recipe. Stochastic. Oh, and before I forget, I've not changed much of anything for the settings here. All of the additives are really very simple. Only thing I've actually changed is maybe the number of candles to hold the signal to line them up with the base recipe. So for RSI or stochastic, the basic settings of each of these is exactly what they are. Stochastic, a little more defensive, but at the same time, a little more aggressive than RSI. Now I'm just going to go straight to the 2-hour chart. And boom. Let's see what the 1-hour chart looks like. So stochastic does a pretty good job all the way through and through, even when the market is just a total hot mess. Short, sweet, and simple. Okay, let's see if we can find a trade here. There we are, one trade. Nice, simple, 1% take profit. Can't get any easier or better than that. And it didn't even stay in the trade that long, which is really good. Okay, here is the next one. Same base. This time we're using ADX. Nice little quick hit here, in and out. Actually did 3 completed trades. So let's go find the second trade. See if it was just like the first one. Nice little quick in and out. Not bad. It looks like it held for about 3-4 hours, 3.5 hours thereabouts. That's pretty reasonable. Now let's take a look at the big picture. Nothing in the drop. Let's scale it down a little bit and see if it picked anything up here. Nope, it stayed out of this whole mess altogether. It did get 2 trades in, but none of this mess. So let's find out where it traded. Here we go, nice little pip right there. Hit and run. So this one looks to be very conservative. Only found one good entry point in really a couple of months. Wow. Only one entry point for the whole year. That is very conservative. But yet, when you look at the lower time frame, there are at least 3 opportunities over the last 3.5 days. So the lower time frame does pretty good here. Okay, on to the next one. Okay, ATR, very limited, very restricted. Only one transfer, or one trade, excuse me, for the entire 3.5 days. Let's see if we can find the one and only trade. So this literally could be $1,000 position, trigger and sell. Okay, let's see how it did since November. Doesn't even get into the market. Doesn't even want to deal with it. So this one is extremely defensive. Parabolic stop and reverse. A little more aggressive than some of the others we've had, but even still, only 2 completed trade cycles. Straight up to middle of November, doesn't even touch it. In fact, it doesn't even get near the whole year at the higher time frames. That's interesting considering parabolic stop and reverse is quite aggressive. Okay, the 1 hour has a couple of good entries. And here we are, literally a hit and run. Okay, let's go to the next one. MACD. Perfect combination. Nice little hit and run, short and sweet. Looks like about half a day. Does 3 trades, 1 position per trade, which means this could easily handle some pretty high trades. Let's jump right up into the long wind. Nothing, completely avoids it, but it does get 3 trades in. Now that's interesting. Let's go see where this got its trades in. Here we go. Looks like February and March were quite profitable. But that's it for the whole year. It wasn't into the market except for last year. And again, well, April this time. So it looks like this particular one tends to favor March, April, and February. Interesting. But still, short, sweet, simple, an easy to use recipe with very profitable results. And that's it. We're back to the dead one that TradingView wouldn't let me finish. So let's go over these again. 14 and 1.2. Short, sweet, and simple. And that is really the best way to make a consistent profit. You don't need to go out of your way and stack 5 or 7 indicators. The least number of moving parts is often the best and easiest strategies to work with. This one stands out because the base strategy is the same in every case. This one also stands out because if something does go wrong, it's easy to take control of it and manually trade it and still maintain a good level of profitability. Now, I will put this link into the description below so you can take this chart and actually apply it to your trading. And if you set up Relay with its max assets limitations, you could easily set up 50 coins or 100 coins with this and only allow 2 or 5 coins at a time. So you would always keep it busy and moving and keep literally a good amount of saturation and trading going on at all times. Now it does do very well on multiple coins. I just chose Bitcoin because that seems to be the market standard. But let's actually move through this a little bit and check out a few lesser known coins. Let's bring up the coin list and let's pick out some standouts. Okay, a lot of people like to trade BNB. Does well, does respectable. Okay, let's look at BAT. Another favorite for many people. Okay, let's see what else we can find. Let's open this up a little bit. Okay, Comp is a popular coin. It does pretty good for its trade cycles too, and very limited risk. Okay, what else can we find? Dash is another popular coin. Not as busy as you would expect, but still solid performer nonetheless. Nice little defensive hedge there. Okay, let's get down to the E's. Of course, my surprise coin. The coin I never thought would be that great. And yet it keeps surprising me all the way around. And if you're on KuCoin, KCS is certainly worth trading in a sub-account. And as you can see, it's quite profitable. Very limited exposure. Okay, let's see. Matic is a popular coin to many. Neo tickles a lot of fancies for some. And let's see. Shiba. That seems to be all the rage lately. It does pretty good. So, Solana. This is definitely a pretty active coin and pretty profitable. Now let's find sushi. For some reason that seems to have a lot of people's interest. And it's not too shabby here, that's for certain. Okay. Let's see. Let's find Kimamiro has a following and good profits too. Not bad. And where is it? XRP, everybody's little darling lately. It's respectable. 7 trades in 3.5 days is not bad. So this is certainly a good coin worth trading. Now, if you're into the longs and shorts, which I personally don't see anything in them, to me it's just a gimmick, but it's a profitable gimmick. But overall, as you can see, there's a lot of good coins here to choose from. And this recipe does well on just about anything. And it's not limited just to USDT-based currency. It works with Bitcoin-based currency as well. Excuse me, Bitcoin quote currency. It does decent. I personally think stable coins are more profitable, but if you're into Bitcoin as your quote, there's certainly nothing wrong with the profits it makes. And it holds its own pretty well. For that matter, Ether does too, if that is your particular fancy. So as you can see, this simple approach can have so many different combinations that can tune it and tone it to specifically what you're looking for. Between aggressiveness and defensiveness, you will find literally the right fit for you. So no matter what kind of a market we're trading, there's certainly nothing wrong with a combination like this. And let's go to one of my favorites. It's not the most profitable, but it certainly does a good job here. So help me out with the YouTube subscription and like this video. Share it to somebody who's looking for a simple way to get into the market without a lot of fuss. And until next time.